PLTR stock news: can Palantir Technologies be the next Microsoft? Is Palantir stock a good AI stock? Hey, there fellow investors and tech enthusiasts, welcome back to another exciting episode of our YouTube channel. Today, we are examining 3 articles. The first one explores the possibility of Palantir becoming the next Microsoft. Our focus is on assessing Palantir's future growth trajectory to determine if it could eventually reach megacap status akin to Microsoft. Subsequently, we delve into an article questioning whether the popular artificial intelligence AI stock, Palantir Technologies, has become too expensive to purchase. This analysis centers on the company's current share price in relation to future earnings and revenue projections. To conclude the discussion, we address the recent development of Palantir Technologies stock surpassing its 20-day moving average. This upward trend is viewed as a bullish and positive sign, suggesting the potential for further increases in the company's share price in the short term. For more content like this, please consider showing your support by liking the video and subscribing. Additionally, you can become a channel member for as little as 99 cents per month, which helps sustain my presence on YouTube. With that said, let's delve into today's stories. Palantir Technologies stock has experienced remarkable growth, with its share price soaring over 200% year-to-date. Notably, this stock is divisive among investors and analysts, with widely differing opinions on the company. This company went public through a direct offering in September 2020, experiencing a surge in share price to $39 fueled by intense buying interest amid widespread hype. Subsequently, it faced a decline to $6 over a few years before rebounding to its current level of around $19. Earlier, I advocated for purchasing the company below $12, aligning with its fair value estimate. Providing some background, Palantir has primarily established its core business with the US government, a positive aspect given its use of the Gotham platform to gather intelligence for various military and intelligence agencies. Additionally, the company expanded into the commercial sector, where its Foundry platform aids large commercial customers in making data-driven decisions, thereby enhancing product and service pricing strategies, increasing margins, and overall boosting profits and revenue through insights gained from Palantir's data analytics. Looking ahead, Palantir's PLTR stock is expected to exhibit volatility in the coming years. While some investors and professionals envision the potential for it to evolve into a mega-cap software giant akin to Microsoft, a thorough analysis of metrics and statistics is necessary to evaluate the feasibility of this scenario. Founded 2 decades ago by a formidable team including Peter Thiel, Nathan Gettings, Joe Lonsdale, Stephen Cohen, and current CEO Alexander Karp, Palantir attracted major investors even before going public. Notably, the CIA's venture capital arm, In-Q-Tel, was one of its earliest backers. The company gained attention over the years for its technology's role in tracking down Osama bin Laden in 2011 and its utilization by the Immigration and Customs Enforcement Agency, ICE, to locate undocumented immigrants in the United States during the Trump administration. Clearly, Palantir is not merely a meme stock, it boasts powerful software with applications in both military and commercial contexts. Currently trading at around $19.84 per share, bullish analyst Daniel Ives of Wedbush predicts a potential surge to $25 per share. However, it's crucial to note that Palantir's growth has slowed over the years. In 2020, the company achieved a revenue growth rate of 47%, which dipped to a compounded annual growth rate, CAGR, of 41% in 2021. This decline prompted concern among management and investors, especially since the initial forecast was a CAGR of 30% from 2020 to 2025. The downward trend continued, with the revenue growth rate plummeting from 41% to 24% in 2022, and management now projects a further drop to 16% for 2023. Despite the recent surge in share price, the disconnect between the share price and revenue growth rate is considered a bearish and negative sign. However, there is optimism regarding a potential reversal in the revenue growth rate. The decline in growth was attributed to uneven timing in government contracts and macroeconomic headwinds affecting the commercial segment. Anticipating a reversal, projections for 2023 through 2025 suggest a growth rate increase from 16% to 19%, eventually surpassing 20%. Additionally, management expects profit acceleration in the upcoming quarters. These factors contribute to a positive outlook for Palantir's future revenue and overall performance. Palantir has maintained profitability on a generally accepted accounting principles (GAAP) basis for the past 4 quarters, with an expectation of continued profitability in the future due to reduced stock-based compensation expenses. Now, let's assess whether Palantir can evolve into a megacap company by comparing it to Microsoft. Many bullish investors and analysts believe that Palantir's growth rate will accelerate amidst escalating geopolitical tensions worldwide. This anticipation is based on the expectation that the US government would upgrade its data mining capabilities and defensive budget in response to these tensions. For investors considering defensive stocks and intelligence contractors, such as Palantir Technologies, this could present a compelling opportunity, especially during periods of geopolitical volatility when these stocks tend to perform well. Palantir's recent launch of a new artificial intelligence platform has garnered attention, and the long-term growth potential of AI is significant. The AI market is expected to grow at a compound annual growth rate of 19% from 2023 to 2032, according to President's research. If Palantir keeps pace with this market, its annual revenues could surge from $2.2 billion in 2023 to $10.5 billion by 2032. Assuming a 20 times price-to-sales (PS) of ratio, Palantir could potentially achieve a market cap exceeding $200 billion, qualifying it as a megacap company. However, there is criticism regarding the sustainability of a 20 times sales multiple. Ideally, a sales multiple below or around 10 is considered more reasonable. Even with this more conservative estimate, Palantir's market cap could still exceed $100 billion, though significantly below Microsoft's massive $2.8 trillion market cap. It's important to note that while Palantir could potentially become a trillion-dollar company over the next few decades, reaching a market cap of $2.8 trillion, equivalent to Microsoft's, seems more distant. Especially considering the growth challenges the company may face in the coming decade, several challenges lie ahead for Palantir, including the development of in-house data mining platforms by former customers like ICE and potential competition in the commercial segment from enterprise-oriented data mining services such as Alteryx, Splunk, and Salesforce. The idea that Palantir could become the next Microsoft is considered a far-reaching assertion, especially given these challenges. While it's not entirely ruled out, achieving a status similar to Microsoft would require exponential growth and significant acquisitions to expand Palantir's overall ecosystem. The company does have a substantial amount of cash on its balance sheet, exceeding $3 billion, providing the potential for strategic acquisitions. However, the comparison to Microsoft appears unrealistic at present. Investors in Palantir should, instead, focus on the company's ability to accelerate revenue growth, maintain profitability, and potentially reduce its premium valuation to present a more favorable buying opportunity. The challenge is determining the optimal buying price, considering the current perception that the stock is expensive. Despite Palantir's prowess in artificial intelligence, the premium price tag associated with its popularity, coupled with a significant surge in share price, over 200% year-to-date in 2023, raises questions about its valuation and the sustainability of this multiple expansion. In summary, while Palantir holds promise and has the potential to become a technology giant, the comparison to Microsoft seems premature. Investors should carefully assess the company's growth trajectory, profitability, and valuation to make informed investment decisions. The analysis suggests that Palantir's share price may be disconnected from the company's fundamentals, and smart investors may choose to hold rather than buy or sell unless there is a significant surge prompting profit-taking. The comparison to Adobe, a mature software company with a 29% profit margin, highlights Palantir's lower 13% profit margin. Even if Palantir were to match Adobe's profit margin, it would still be valued at a higher multiple, 68 times earnings, compared to Adobe's 56 times earnings. While Palantir's growth is acknowledged, the high premium at which it currently trades may be a cause for caution. The recommendation is for intelligent investors to wait for a potential pullback, considering Palantir's known volatility. The recent bullish indicators, such as Palantir surpassing its 20-day moving average, suggest a short-term bullish trend, and some sources label it as a strong buying opportunity. However, the author emphasizes the need for careful consideration, and the decision to buy or hold ultimately depends on the investor's risk tolerance and strategy. The article concludes with the author's personal stance, expressing bullish sentiment on Palantir but choosing to hold rather than add to the position at the current high share price, aiming to lower the average cost over the long term. And that's it. We hope you enjoyed this video. Don't forget to hit like and subscribe to our channel for more updates. Thank you for joining us in this video, and we hope to see you in the next one. Happy investing!